Welcome to TradeTheNBI.com. This is John. This report is for Cinco de Mayo. Here in Italy, we began the reopening process, and I don't know if it was intentional or otherwise, but they've been doing this automatic slowdown of the internet here in Europe generally. For what reasons, we don't know. There really hasn't been that big a strain on it, but for some reason, with the opening of many different businesses, we had all sorts of internet issues here in Italy. So go figure. But that didn't stop the market from behaving exactly as we expected. We came right to the 50%, and boom, guess what? Automatic buyers came in. Not showing as clear as on the NASDAQ is much clearer than this. When we look at the DSC, there's a perfect relationship of the spidering of midterm buyers and shorts with the cyan and green going back and forth, and you'll see it on the next chart. It's quite beautiful. But as we talked about before too, with the flattening of gold, we were waiting for, because we already had the rise of the Azure and that meeting of the two before you could signal any form of softness. But the more you keep hearing about the gloom and doom and people expecting a huge leg lower, the less likely that is to happen at the present time. It's when people give up on that idea that it's most likely to occur. So that we're continuing to see these ranges back and forth every time we get to the key supports. It's just a matter of waiting for them, because there is no intention of the Fed to stop supporting price at this particular time in the market. I don't know why our Deal Pink didn't show up there. Let's put it back on. And here it is. Look at that. How beautiful is that? Once we had this jig-jag, the boom, and then look at how beautiful those are. I mean, those are identical. We don't see that often because it doesn't really happen in a natural format. It shows you the precision with which they're making these kind of adjustments. And so I think that's perfect to watch. And you can see the clear distinction here on the shakeout of the gold in its flatness with the rising Azure. And it's not until they meet that we'd be concerned about any form of a extended downturn move. Our expectation, euro, again, like we've said, the euro is destroyed. There is no European economy, so to speak. And again, they're just keeping it between the bottom side of our marker line here, right around that 108 range. Hasn't changed. And you can see they're floating beautifully alongside of it, despite any of the so-called news. Everyone's touting the huge bounces in oil. I mean, this is like really nominal given what you're seeing, but it is an improvement, and that's just about the idea that they're, at some point with production limitations and increased activity with the opening of certain states, the question really now is going to become the divergence between blue and red states and how much more active the red states are in their opening process, and whether or not it will result in a really disjointed attempts at recovery. And I think that's really ultimately going to be the big problem. Without a consistency among states, this was the whole point of interstate commerce laws now, to maintain the free flow of commerce, and you're not seeing that. So until that's worked out, I think it's just going to continue to be a problem. But as long as the government is continuing to make up for the shortfall in revenue by borrowing and giving it to people, that will sustain things. So there you have it. No question that gold is going to continue its resurgence. It's going to take some time. From an intraday standpoint, it really was quite nice. We had that big pre-market sell-off there that just filled in some of the gap range there. We had these beautiful buys that then turned in, and it was just excellent wave action. I mean, you had the clear breakdowns, the resets with the orange below, even the white in these categories. Sigma events that call for. When we had the report from the previous day, we were just at the peak of this, and we were expecting a return down. It came down to the 23% and found solid support right at that particular time, and that led to a nice uptick, which then gave way to a little break, and we just kept going up and down. But the bias definitely was improving more and more as we started to get higher and higher. Then the dips became far less significant. They did end up with a couple of the Sigma events that did take us to the zero mark, but the zero mark at that point had risen, so not as catastrophic. And then ended up with the Pretty decent buy configuration. Didn't quite get below, but this was a pretty big move underneath the negative 13 all the way down to the minus 20 plus range, and then we started to see a solid build from there. And that just continued and literally has progressed all the way into the pre-market. We do have some positive extremes. They started all the way back here on the correct marker, and that way you can see is just below our 2817 algo level, or the 2811, but you can see the finish of it was literally right on that algo level, and since that's the first extreme, I would just be looking again at that 2817 as the potential test on weakness, but I don't know that you're going to get that anytime soon. This is just the nature of things, and we just go with what is. The baseline has been set, and it's effectively just creating a new zero. I mean, this is the point at which they intend to buy everything, and that will create the upspurts from those selected points. So it's just a matter of going with what is as opposed to what you think it should be. So I've been preaching that for a while now. Continue to believe it because it's still the case, and we can see it because the results have been exactly as expected. As always, though, I will, as long as internet permitting, be on the Skype chat, putting up any unique situations. As always, trade well. We'll talk to you later.